Hello, everyone. Thank you so much for joining Secure Tomorrow. I'm Rashatta Daugett, your host and presenter today. I'm so excited about today because I get to share with you something that I'm passionate about, and that is being able to leave a legacy and doing that through insurance. And so today is just really a fundamental how to, what to know, what not to do type of situation. But there will be more workshops that go into more detail on specific topics of insurance, but we're just going to do a high level overview about what insurance is, the kinds of insurance, and how to pick the right policy for you and your family. So without further ado, I'm going to share my screen with you all. So hello, everyone. Welcome to Secure Tomorrow, the life insurance workshop. Protecting Your Future Today. I'm your presenter again, Rashatta Daugett, and you can follow me on social media at Just Rashatta on most platforms. Again, welcome. Thank you so much for joining. I went over a little bit about what we're going to be talking about, a little bit about me. I'm a mom of four. I've been a life and health insurance agent for 7 years. And my goal is to insure 1,000 families in 2025. And not just because I want to make a lot of money from writing insurance policies, but because I would love to be able to know that I helped 1,000 families in 2025 ensure their legacy. A bit of fun fact about myself, I received the Presidential Lifetime Achievement Award in 2023 alongside my husband of 25 years. Drop a thumbs up in the chat if you already have life insurance. All right. So, what is life insurance? Life insurance is financial protection for your loved ones. It's really something that that your family can use after you pass away. The definition of life insurance is a contract between you and the insurance company. You pay a premium, and in return, your beneficiary receives a payout when you pass away. Now, not to get into too many particulars, but there is a new kind of life insurance. They're talking about the old kind of life insurance, but there is a new kind of life insurance that also allows you to have what they call living benefits, where you can benefit from having that policy even while you're still living. Due to different circumstances, but we're not going to really go over those things today. We're just going to really go over the basics. So the purpose for life insurance is to provide financial security for your family, to cover any major expenses like your mortgage, your debts, or education costs should you pass away, and to replace the lost income and help maintain the lifestyle that you've provided for your family during the time you were living. How does it work? You choose a policy and coverage amount, which we'll talk about a little bit later, and you pay your monthly premium. Most of the time, you can pay that monthly premium bi-monthly, or you can pay it quarterly, or you can pay it annually. So there are a few different ways you can pay. And then your loved ones receive a tax-free payout, which is called a death benefit, when you pass away. A question: did any of you know that life insurance can also build cash value? How many of you knew that? Let me go to the chat. Okay, we have a few smarty pants. Okay, Tiana said, what? All right. So yeah, stay tuned, Tiana, and wait for this because we got some good information coming for you. So why life insurance matters? What would happen if you were gone tomorrow? Did you know 1 in 3 families would face financial hardship within 1 month after the main sole breadwinner of the family passed away? Life insurance provides income replacement for debt coverage and peace of mind for your family once you're gone. It's not just about you, it's about protecting those that depend on you. And that's very, very important to me. And I'm hoping that's also very, very important to you. Here's a fun fact: 40% of Americans don't have life insurance, but most overestimate the cost by 3 times. So that means most people don't have life insurance just because they don't know that it actually costs 3 times less than what they thought it was. That's crazy, right? So, what is life insurance? Uh oh, we already did that. We want to move forward. There we go. Okay, there we go. So here are some common myths. We talked about 40% of Americans overestimating life insurance, the cost of life insurance. So here's some other common myths about life insurance. It's too expensive. But what if I told you plans can start as little as $25 a month? What about the notion that you don't need it because you're young and healthy? Well, that's actually the best time to buy life insurance when you're young, because the younger you are and the healthier you are, that is when you can lock in that lower rate. And a lot of times, if it's not term insurance, you can lock in that rate until you actually pass away. So that's a great feature to have. I have coverage through my job. I've heard so many people say this. And the thing is, that coverage through your job, it doesn't really take in consideration your situation in particular, as far as your income needs, your debts, and things of that nature. And if you decide to leave that employer, or if they decide to lay you off, a lot of times you don't get to keep that life insurance policy. And depending on how long it's been and how old you are after receiving that life insurance, it could be very expensive to then replace that policy. And then the other myth is it's too complicated. Well, if it's too complicated and you feel like it's too complicated, that's why you're here today, and I'm here to help you with that. So here's the types of life insurance. There are many more, but we're just going to cover the foundational basic three right now. So you have term life insurance, which covers you for a set period of time. Most of the time, it's 10, 20 to 30 years. Sometimes you can fit a 15-year policy in there or a 25-year term. It's more affordable, and it's great for young families because it's cheap and you can get a huge, huge death benefit. The negative is that it does not have cash value. So all of the money that you pay into that policy, it just goes into the policy. So once that term is up, your money's gone, your term is up, and now you have to find another policy. Or you can reapply for another policy at a higher age. And we'll talk about that a little bit later. And then you have whole life insurance. This is lifetime coverage, and it also builds up cash value. That's a great, great asset in being able to pay into something where it actually builds cash value for the long haul. Higher premiums are connected to your whole life insurance. So you'll pay a little bit more than term, but it's a lifelong security that you can trust in, along with that cash value, as well as the coverage that you need to protect your family for the future. And then you have index universal life insurance. This particular kind of life insurance is flexible premiums. It also has a cash value growth connected to it. You have more control over your payments and the amount that you're able to save through this particular life insurance. And it also has an investment component attached to it, and that's where the amount of cash value that's built up into this policy is indexed, which means it's aligned but not in the stock market. So you have a floor in an index IUL, which is sometimes 2 to 3%. And then you have a ceiling. And a lot of times that's about 12 to 13%. And so in between, depending on what the stock market does, if the stock market's up, say 10%, then that indexed universal life insurance policy will add to the cash value growth that 10%. Now, if it's, let's say, the stock market is negative, then you don't have any issues. You're still going to get that cash value. And that's that floor that we talked about in the beginning. You're still going to receive your 2.5 to 3% that's promised, depending on the product. So term is great for affordability, but whole life and universal provides long-term benefits. And now, coupled with the new type of insurance, which is living benefits, all three of these can actually provide benefits to you while you're yet still living, and also provide a death benefit to your family when you pass away. So that's a great, great feature. So how much coverage do you need? That's the question, right? And a rule of thumb is to make sure that you have the 10x factor and that's 10 times your income, your annual income. For example, if you earn $50,000 per year, you should have a $500,000 policy to cover 10 times the amount of what you were bringing in. Other factors to consider is how much your mortgage or rent is, if your kids, if you want to make sure that they go to school, college tuition, outstanding debts that you may have, and also daily living expenses that your dependents may incur after passing. So I want everyone to kind of take a moment to estimate how much coverage you need and drop it in the chat for me. I wish I had some music. Okay, we have Tiana. She said she needs about a $40,000 policy. Now, is that 10 times the amount that you're making right now, Tiana? So Bernadette says she needs about $350,000 policy. All right. Okay, so Tiana, let's work a little bit and find out how much 10 times your annual income you would need in a life insurance policy. I hope everyone is finding value in this as we wait on Tiana. Awesome. Bernadette said, yes, this is great. So Tiana would need a $320,000 policy. All right. Great, 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 great job, you guys, on figuring those numbers out. All right, let's move on to the next slide. To the next slide. Okay. Let's see. These are some things to ask yourself when trying to choose the right plan. And if you all should need an actual plan, I'm here to help. But here's some of the things that I'm going to ask you to think about and that is, what's your budget? That's the determining factor. You have to determine what your budget is. And I always tell people to determine a budget that you can pay in just about any circumstance, because this is something that you want to make sure that you're able to pay for the long haul. So if you're in between jobs and getting unemployment or something like that, you want to make sure that you can borrow your premium to keep this in place, to make sure that, one, you have that cash value build up if you do choose a plan that has a cash value build up, and two, that this is not something that you lose later on in life and then have to reapply for coverage at a higher age. And we'll talk about why that's not really the best way to go in a little bit. And you also want to look at the number of dependents that you have. Consider how many people depend on you for support. And this will change throughout life. And so as these things change, you want to stay in contact with your life insurance agent to make sure that you're actually covering those life changes. And then you want to say coverage versus investment. Are you really just looking for coverage right now to make sure that if something happens to you, everything is taken care of? Or do you want that investment component that can be added into a life insurance policy? And so you want to kind of weigh the differences and look at those policies as well and get quotes for both. And then you want to look at your major debts. Consider, your family needs, how you financially contribute to your family, and what those large, especially major debts like cars and houses, timeshares, things of that nature that could almost bankrupt your family if you're not helping them. And so those are some of the things that you want to look at in choosing a plan. All right. Now, the cost of waiting. We've been kind of leading up to this, this particular slide throughout this entire presentation. And I've hinted at it's not good to wait. So here's a slide that kind of breaks down why I keep reiterating it's not good to wait. The longer you wait, the more you pay. For example, this is an example for a female at the age of 30. A $500,000 10-year term policy may cost $23. At age 40, that policy jumps to $36. And you might like, that's a lot. But again, the older you get, the more risk you more risk you have for also other health risk and things happening within your body. Those of us that are over 40 know that there's a lot of things that start happening at 40. We can't do the things that we used to do. So that also impacts the policy. This is just a quote for a female with standard health, a non-smoker. But at age 40, we're looking at $36 a month. 10 years later, at age 50, it could be as much as $77 or more per month, depending on health factors. So the bottom line is, the best time to get life insurance is now. You want to lock in that rate. That $23 rate is an awesome rate. And if you're looking at an investment policy, a policy that would allow you to also have cash value, you're looking at a little bit more, but not that much more. When it comes to these policies. And so you want to lock those rates in as young and healthy as possible, because the older you get, the more at risk you are for health ailments and things of that nature. And an underwriting period, the older that you are, the more it's going to cost. All right, here are some life insurance mistakes to avoid. Waiting too long. Again, the higher premiums and potential health issues come along with waiting. Under-insuring yourself. Make sure that your plan covers at least 10 times your salary. And relying only on your employer. Don't do that. keep get what your employer gives you, but also have another policy outside of that, another policy or two outside of that. When you lose that job, you also lose that coverage. And so you can still have your policy on the other side, that you got your one or two policies that's still working for you. And then not listing the right beneficiaries. You want to keep these things up to date after life changes, when you get married, when you have kids, things of that nature. You want to actually make sure you are updating this information as life changes for you. And also making sure that you update the policy amount. You may need to get additional policies for new additions to your family. So you want to keep those things in mind as well. All right. All right. So now's the time you all can come off of mute and ask me your questions. And I am here for you. Anyone have any questions?
I do. I have a question. So after going through and watching your presentation, what do I do if I'm underinsured? Like I do have a policy, but it's currently not 10 times um my salary.
Right. So what you want to do is you can keep that policy. And if you're underinsured, what you can do is get in contact with me and we can sit down and do a consultation, a one-on-one consultation, and we can look at what the cost would be to actually get you to that in a different policy. And maybe you want to switch it up. I don't know what kind of policy that you have. We can look at what you have right now. And then maybe you want to try an index IUL, or maybe you want to try a whole life policy, or maybe you want to replace the policy altogether because it's cheaper to get the policy that actually does take care of your entire need without having that additional policy. So we can do a one-on-one consultation and look at what your options are individually.
Okay, I have another question because I think, especially for the Black community, I know for me, growing up, when we think about life insurance, and you're saying 10 times, is that 10 times covering like the burial plus additional for the family? Because I think previously, like just listening to like my parents and my grandparents and aunts and uncles, they've always talked about life insurance, but they talked about it with it covering the burial and not necessarily, I guess, the lifestyle after your burial.
Right. So that's what most people think about, is just the burial part. And a lot of times we don't really think about what happens to our family when we are no longer adding to the financial stability of our family. And so the next component to that is, if you're no longer, you're an empty nester and you don't have anyone relying on you, you don't have any dependents, but what kind of legacy you would like to leave to your grandchildren and those that are coming after you. And so while the burial is absolutely something that you can utilize your policy for, the additional amount goes to your dependents or those who you have deemed as important to your legacy, to actually help them build their own legacy. Your burial could cost $30,000. You have a $350,000 policy. So the additional funds would actually go to your beneficiary, and they could utilize those funds to start a business. It's tax free, so they can kind of do what they wouldn't normally be able to do had they not had that lump sum passed down to you. And there are some other things that we can talk about as far as family trust and things of that nature. Well, we're not getting too deep. We're not getting too deep. But there are so many different ways to utilize your policy to leave a legacy and continue that legacy for generations to come. So this is just a foundation and just the beginning. You can get a policy just to bury you, and that's great, because that also takes a headache and a weight off of your family members, not trying to do a GoFundMe to figure out how to bury you. But if you're trying to leave a legacy, additional funds are needed. And this is the easiest way to leave your family additional funds to fund their dreams.
Thank you so much for that.
You're welcome. Any more questions?
I have a question.
Yes, Miss Tiana.
Am I able to increase or decrease my coverage later on?
Absolutely. You can do that in several different ways depending on what policy you have. You can add additional riders. You can also overfund your life insurance policy. It just depends on what you have. Again, I would defer to setting up a one-on-one consultation with me or my husband, who's my partner in business. And we can kind of look at what you have and then see exactly what you're looking to do as far as leaving a legacy for your family, and then we can kind of direct you from there.
Mm. And I have one more question. Thank you for that. Do um will my premiums increase over time?
Depending on what kind of policy you have, no. Most of the time with whole life insurance and indexed universal life insurance, those premiums are pretty locked in. There are some designing that has to do from an agent's perspective to make sure that your premium doesn't go up. With the term insurance, your premium doesn't increase within the term, but after the term is over, because you are 10, 20, or 30 years older, to get reinsured, it will cost more because you are older. It goes back to that. It almost is like you waited to get a policy.
Oh. Well, if I have a term policy, am I able to turn it into a permanent policy without a medical exam?
You wouldn't necessarily be able to turn that, well, depending on what the product is, I won't say that. Depending on what the product is, you may be able to surrender that over into a uh, whole life policy. If not, you can cancel that policy and then apply for a whole life product.
Oh, okay. Thank you.
You're welcome. You're welcome. Do we have any more questions on the line? All righty. So,
I'm sorry, I have one more question. How
yes,
do we get in contact with you or your firm to actually set up the one-on-one consultation?
absolutely. You can email and put one-on-one consultation in the description or the subject line, doggettbusiness@gmail.com. Again, that's doggettbusiness@gmail.com. And you can put one-on-one consultation in the subject line, and we will get you our calendar, and you'll be able to schedule your one-on-one consultation with us. So, want to be an insurance agent like me? I wanted to throw this in there. No pressure at all, but I did want to give you some statistics about being an insurance agent. This is a $1 trillion industry. It is, it's a proven industry. It's been around for a very, very long time, hundreds of years. You also have the potential to make $100,000 a year just part time. In 2023, the average income for a life insurance agent was $75,125 a year, or $36 per hour. This was found on ZipRecruiter in Georgia. So that's a great income. That's a great conservative income. If you're working full time in this industry, it definitely can make more. But at the end of the day, I love this industry because not only can you make money, but you are also helping families leave a legacy for their family. And so that to me is a win-win situation for everybody involved. You're not just selling a product and pushing a product on someone that they won't need and won't benefit from. You're actually giving families an opportunity to leave a legacy for generations, generational wealth by utilizing this industry to inform, educate people about life insurance and also helping them sign up for life insurance. I'm with an extremely great company. And again, Daugett Business at gmail.com if you would like to have a one-on-one consult about what I do and who I work with. I have several different carriers, so I'm not just, stuck to one carrier, so that I can actually service a myriad of different people with different situations and circumstances, because the bottom line is we need people insured. And so if I have a product that is going to stifle my ability to insure people in certain categories, I'm able to look outside of that and find companies that actually insure just about anybody. So I am super excited and super passionate about this industry and what it means, not only for our community, but for everyone who has a family and wants to leave that legacy of financial stability to them. All right, we're about to wrap it up. These are the final takeaways. Life insurance is essential for protecting your family. The best time to get coverage? Now. Rates go up with age, and also with age comes more health issues. So the best time to get it is right now when you know you need it. Always compare policies and choose coverage that fits your needs and budget. I can't express this enough, that fits your budget. There's a lot of talk about infinite banking and being your own bank. Those concepts are real. You're capable of actually utilizing the information that's out there, but it has to be in your budget in order to do those things. And so let's start with the foundational, and then we can work our way up to, those types of policies and things to utilize the insurance for. So the next step for you is to schedule your free one-on-one consultation with myself or my husband. And before you go, tell me what's one thing that you learned today. Tiana said not to wait. Great. Yes. That's the theme. Don't wait. Get insured now. To really leave a legacy, 10 times my salary. Awesome. Thank you so much. Thank you so much, Bernadette, for that. And not just cover the burial. Yes, yes, yes. We want to leave a legacy. We don't just want them to just bury us. We want them to be able to say, hey, I was able to start a business because my aunt, my mom, my grandmother left me some extra. Well, awesome. I thank everyone for joining today. It is absolutely my pleasure to have served you in this capacity during this workshop. I am so excited about what's to come. I'm so excited about our one-on-ones coming up and you being able to speak to me and talk to me about your personal needs and actually getting you covered, not just to bury you, but to leave a legacy.